Hey there, everyone! Welcome back to our channel. If you're new here, don't forget to hit that subscribe button and join our community of curious minds. Today, we're diving into a topic that affects both our personal finances and the world of business: depreciation. What is it, and how does it impact value? Let's find out. So, have you ever wondered why a brand new car loses value the moment you drive it off the lot? Or why a piece of machinery might be worth significantly less after just a few years? The answer lies in the concept of depreciation. But what exactly is depreciation, and why should we care about it? Let's break it down. To put it simply, depreciation is the reduction in the value of an asset over time. This decrease in value is usually due to wear and tear, age, or obsolescence. It's an essential accounting concept that helps businesses and individuals understand how much their assets are worth as time goes on. Let's take the example of a car. When you buy a new car for, say, $30,000, it doesn't retain that full value indefinitely. In fact, studies show that a car can lose about 20% of its value in the first year alone. So, after just 1 year, that car might only be worth around $24,000. This process continues over the years, and by the time you reach the 5th year, it could be worth less than half of its original price. This loss of value is what we call depreciation, and it's critical for both personal finances and business accounting. But how do businesses account for depreciation? Well, they use different methods to calculate it, with the most common being straight-line depreciation and declining balance depreciation. Let's break them down. First, we have straight-line depreciation. This method spreads the cost of the asset evenly over its useful life. For example, if you bought a piece of equipment for $10,000 and expect it to last for 10 years, you would depreciate $1,000 each year. This is simple and straightforward, which is why it's widely used. On the other hand, we have the declining balance method. This method applies a fixed percentage to the asset's remaining book value each year. So, if you use a 20% rate on that same $10,000 piece of equipment, you would take 20% of the remaining value for each year. This means in the first year, you'd write off $2,000, but in the second year, you'd write off 20% of $8,000, which is $1,600, and so on. This method often results in higher depreciation in the earlier years, which can be beneficial for businesses looking to reduce tax liabilities early on. But why does depreciation matter? Well, it affects several critical areas: financial statements, tax obligations, and even investment decisions. For businesses, depreciation is a non-cash expense that reduces taxable income. This means less money paid in taxes, which can be reinvested back into the company. For instance, let's say a business earns $100,000 in revenue. If they have $10,000 in depreciation expenses, their taxable income would be reduced to $90,000. This reduction can significantly impact cash flow and overall financial health. Now, let's switch gears and look at how depreciation affects individuals. When you buy assets like cars, electronics, or even real estate, understanding depreciation can help you make informed purchasing decisions. Knowing how much value an asset will lose can guide you in negotiating prices or deciding when to sell. For example, real estate can also depreciate, but it's important to note that property values can also appreciate due to market conditions. However, if you're buying a home as an investment, you'll want to consider how depreciation might factor into your long-term returns. So, in summary, depreciation is a crucial concept in both business and personal finance. It helps us understand how the value of assets changes over time due to wear and tear, age, or market conditions. Whether you're managing a business or just trying to make smart buying decisions, keeping depreciation in mind can save you money in the long run. If you found this video helpful, please give it a thumbs up and share it with friends who might benefit from understanding depreciation better. And, as always, drop your questions or comments below. We love hearing from you. Thanks for watching, and we'll see you next time for more insights into the world of finance.